Hey, what's up, guys? Welcome back to the channel. So, this is episode 1 of investing for beginners or investing for teens. So, in this video, let's understand what are stocks. What are stocks or shares? It is basically a tiny piece of ownership in a particular business. So, whenever you say you want to buy shares or you want to buy stocks, just know what you're doing is you're buying basically ownership in the business, right? So, that is why in investing, an important thing is to analyze the business in depth, because what you're doing as an investor is basically you're buying ownership in the company. So you only want to invest in companies where you think the business model is good, where the business is scalable, if the management and promoters are good, because that is you basically buying ownership in that company. And you can buy a stock just like you'd buy, let's say, sneakers online. No, quick, online, easy. And whenever you say that let's take an example, you want to buy one stock of Zomato, right? Because we use that on a daily basis. So when you're buying one stock or one share of Zomato, you're basically buying a tiny piece of ownership in Zomato. Now let's say you want to start a new company with your friend, right? So first what you will do is that you will identify business model, what you want to do. Now in this example, let's say that you want to sell sneakers, right? So first of all, you'll bring your own capital. Then what will happen is that you'll either have to take debt from the bank, or you can issue equity, or you can issue shares. So whenever you're taking debt, what is happening is that you're taking loan from the bank, and whenever you're issuing equity, what you're doing is you are giving someone ownership in your company. So what happens is you buy a stock, you identify a good company जिसका business model अच्छा है, company is performing well. Then what happens is that let's say the one stock that you bought at 100 rupees. Now because company is performing well, company is consistently showing good profits and good revenue, then what will happen that 100 rupees ka stock will become 150 and 200, and that is basically how you make money by investing. Now, without getting into the technicals, so let's say how investors make money, right? So there are two parts, we'll discuss in detail, but in investing there are two parts: PE, that is your price upon earnings, and your EPS, that is your earnings per share, that define how much money you make. That is why when people say that investing is only for adults, I don't agree, because see, if you start early, you will get access, you will get more time, you will get more access to compounding, you will be able to analyze different types of businesses, and what matters most in the markets is experience, going through different cycles, bull cycles, bear cycles, right? So now let's understand how you can start investing as a teen. Now, investing may if you're above 18, then you can start investing. But if you're below 18, then you can maybe use your mom's account or your dad's account to start investing. That's basically how I started investing at 14. The main goal is not to invest like a big amount, 1 lakh, 10 lakhs. No, the main amount is that you must have the knowledge, or you must have the ability to do research on your own, to identify good stocks, differentiate good businesses from bad businesses. And basically when you grow up, all that research and all that time you spent, that will compound, and that will help you basically make money. One strategy that I really used in the beginning was that whenever I used to get pocket money, I used to save some amount of pocket money. So let's say, for example, if I'm getting 2000 as my pocket money, I would try to save at least 1000 out of the pocket money to invest. But one thing that I would advise you guys is to make sure that you have researched the company well, make sure that you have knowledge before investing, because going headfirst without knowledge into a concept like investing can really backfire. So make sure that you have necessary knowledge, as we're going to discuss going forward. So one thing that I really did was try to save up on my expenses and basically save the money to invest. Right, so guys, let's just briefly look at some of the sites or some of the websites that we're going to use for research purposes. We'll just go through a brief overview, and in the next video, we'll deeply understand what are the different components to these websites. So if you guys are liking the video so far, make sure to drop a comment and like the video, and also subscribe to the channel to stay a part of this journey. So the first website that we have is screener.in. You can see this website is right here. This is the homepage of the company. Now here there's three main segments. First is feed, which is this. There is a section for upcoming events. Here you can understand which companies ka results are coming out, which companies ke con calls management is doing, right? And then there's also a section known as screens, where you can create your own screens. Going forward, we're also going to create screens to identify business or filter different businesses. There's also a section known as tools that you can use AI, but I personally don't believe in using AI for your research. I believe that jitna aap padhoge, the more you read, the more you understand about the business, the better understanding you'll have, and AI doesn't have that context, right? Then you can understand commodity prices. This is especially important for pharma and chemical companies. You have to track these prices, and also metals. Then there's shareholders, like let's say your favorite investor, Rakesh Junjunwala. If you want to like if you want to find out where he is having position or where he's holding a stake, then you can find out through using this. Then company announcements, let's say company wants to do acquisition, company is announcing dividend, you can understand this. Then there's credit ratings. Now let's take an example of a company, Zomato, right? You can see its parent company name is Eternal. So here this is our main screen. So here you'll understand different metrics. You can see market cap, then you'll see PE, then you'll see book value, then also ROC, ROE, all these different metrics. We'll understand this step by step in the next video. So market cap is basically market capitalization. That basically means ki in rupees 3000 crore you'll basically be able to buy Zomato, right? Zomato, not Zomato, but it's Eternal, because Eternal mein there's three businesses. First is Zomato, then Blinkit, then there's Hyperpure as well. So basically that market cap means nothing but your amount to buy the entire business, right? Or basically how much the entire business is worth. Then there's ROE and ROC. We'll cover these topics in a separate video because these are very important topics. And this is basically my entire screen, or these are basically the parameters that I look at whenever I want to get a bird's eye view of the company. For example, ROE. I track ROE because ROE shows me in which direction the business is heading in. Where is the business going fundamentally? If the business is going right, ROE ka direction will seem to improve. Even though either you will see 2% ROE, but company was doing 1% ka ROE and now company is doing 2% ka ROE. So in my opinion, company is heading in the right direction, or the business is heading in the right direction, right? So guys, don't worry. We'll discuss these topics, each and every topic very detailed in the next video. This is just a brief. You understand that you'll look at various topics, and at the end of the day I'll also be discussing why I look at these parameters to analyze a company. And looking at these parameters, I can analyze a company under 10-15 minutes. Not analyze, but I can just get a sense of direction where the company is going. This comes the main section. Now what is here, we'll understand an about of the company. What is the company when it was founded, but this doesn't matter itna. What is the main is the business segments right here. Now you can understand Zomato has three main divisions. First is your food delivery business. Then you'll understand a brief of the business segments. That company operates Zomato B2C technology platform. You can read it to understand more about the business. Now this is very important in analyzing different types of businesses, because as we mentioned in earlier as well, whenever you're buying a stock, right, you're basically buying a ownership of the company. So analyzing the company, analyzing business model of the company, analyzing whether business model is scalable, how efficient is the business model, that is very important, and that you can do through this section right here. Then there's operational metrics, your gross order value, your orders in million, your average order value, average monthly transaction customers, all the different metrics that are related to Zomato. Now in case of banking company, that will be like an AUM, the asset quality, all the different metrics of the related to business model of the company. Then you'll also see there's second business, that is Hyperpure Supplies. Hyperpure is a B2B platform for supplying food ingredients and other products to restaurants and other B2B buyers. Then there's the quick commerce, that is the Blinkit business, right? Company acquired Blinkit, and other say Zomato started doing well actually. And then this is an operational metrics of FY24. FY24 means financial year 24. Financial year starts in April 1st and ends in 31st March. Right, but what happens is many times this business is this information is outdated, or this information is not up to date. So what you can do is you can go to this section right here, document section, and when you go to document section, you will see three sections. First is announcement, whenever a company makes dividend announcement. Then there's annual reports. Then there's con calls. And in con calls, what you want to do is you want to click on this PPT right here, that is investor presentation. So as you know, company in a financial year, company announces results 4 times. So you always want to analyze the latest PPTs, because latest PPTs show you the latest information. And if you want to understand more about the business, if you want to learn more about the business, then you can go in the past PPTs to do your own research. But that's not really necessary. So let's take this example. If I want to open a PPT, this PPT is basically the company annual quarterly results company shows. Here you can understand about the business. Company presents its quarterly results, how was its revenue, sales, and also many companies provide revenue guidances or guidances in general during these results. Guidances are nothing but companies basically telling you how we will perform in the future, but we'll look at that separately. Then you can look at it company ka PPT, the different business segments in order to understand. I think this is a more reliable source of information if you want to analyze the business, if you want to operationalize, you want to look at the growth metrics, the operational metrics. this is a more reliable, then you can just go through the PPT. Right now, you can also see the chart right here, the P ratio chart as well. We'll understand what is P. Now there's different metrics as well: sales and margin, EV EBITDA, price to book, market cap to sales. We'll understand all of these going forward. Then there's a peer comparison, right? So as you know, quick commerce, but there's only two companies: Eternal, Swiggy. Then there's FSN, that is your Nykaa. Then there's Brainbees, that is your First Cry. Cartrade Tech, that is your Carwala or Bikewala. You can understand these companies. So here, this is quarterly results. Now I'll just provide a brief. First is what sales and expenses. Sales minus expenses gives you operating profit, or your operating profit. This sales, this is known as the top line of the business, that is your sales. Then there's operating profit margin or EBITDA margin, you must have seen. Then there's other income, interest, depreciation, profit before tax, net profit, and EPS. Then there's the profit and loss. Profit and loss means the annual income statement. So this is for the entire year. Then there's the balance sheet. Now a lot of people give importance to balance sheet, but I'll explain the next video why you give more importance to income statement and cash flows rather than a balance sheet. Then there's the cash flow statement. Now there's three types of cash flows. We'll understand all of these in depth in a separate video. This is just an introductory video to get you familiar with the interface. Then there's ratio, debtor days, inventory days, days payable, and then there's the shareholding pattern. So move to the second website. So the second website is Tijori Finance. You can look at its website or whatever. Then there's timeline. Then timeline, you'll understand what are the different companies that you track. Here also, similar to Screener, here also you can see which companies have the results coming up, which companies have the con calls coming up. Here you can also get a summary of the documents that companies have submitted, basically similar to the Screener ka interface. Now here also you can look at, let's say, Zomato only. Let's look at Zomato. So Zomato, may we'll go to the overview. Okay, you'll basically get an overview of the company, market cap, ROE, sales, वगैरह, what company is doing, and about. This is a very brief about. Screener का summary, that is more useful. Then you can go down. You can compare it with Swiggy. Swiggy का price कैसे गया है over the let's say last 1 year. Last 1 year, Eternal has done well. Why? Because market share increasing, sales increasing. But we'll discuss that later. Then there's a financial statement ka consolidated. You'll get this. Then there's forensics here as well. That this is also to get a bird's eye view of the company, contingent liabilities, depreciation effect, capex, ROC, these types of effects. Then also what important is market share. So Zomato has a 57% market share in food delivery. That is a good operational metric. Then you'll understand in pie charts. This is a good feature of Screener. Is pictorial, you can understand better rather than going to the PPT or going to the presentation. So first you'll understand quick commerce, Blinkit is 33%, Hyperpure is 32%, and then the delivery, that is your core Zomato, that is 31%, and then 2% is your dine out, that is district. Then segment breakup, you can understand here. Operating profit breakout, you can understand. Then when we analyze capital goods company, we'll look at order books as well. Then you can compare the operational metrics of companies as well. This is a very good feature in Screener, in Tijori as well. Like if you want to measure quarterly orders, quick commerce, you can look at it. Actually, Zomato, Swiggy ke numbers are yet to come, Q1 ke numbers, but you can just look at it. Then there's monthly transacting users, monthly active delivery food restaurant, gross order value. All these different operational metrics. These will help in comparing between two companies, and this will basically tell us which company we should invest in, which company has a good business model, which company is scalable, which company is not. And then there's a peer comparison as well. Then you can also go to the financials to understand about the company, share price CAGR, EPS CAGR, PE CAGR, CFO CAGR. We'll understand all of these going forward. Then there's the balance sheet. Now, a good thing about Tijori is that it provides everything pictorially, so it becomes very easy to understand. Then there's the cash flow analysis. Then also there's profit and loss. Then there's also cash flows. Then there's different types of ratios for this company. And then quarterly results. Then reverse DCF. This is also very good to analyze. Reverse DCF is actually very good to analyze the valuation of company, whether the risk reward of the company of investing in this company is favorable. Whenever we see that companies have gone to very high P multiple, then we can use that to find out what is the growth rate that the company must maintain in order to sustain this high valuation. So these are basically sites, but these are different sites we're going to use for this series, right? So if you guys are excited, just make sure to comment down below and share with your friends who are interested in investing. And then I'll see you guys in the next video. Thank you.